Hi, this is Matt Amberson, principal of ORATS, and today we have another exciting backtest to look at. This is a more intensive backtest. This is the ORATS scanner, and what I've done is I've scanned every one day, and I've got 10 results and 2 option trades per stock with a total premium per stock of 2,000. What we're going to do is we're going to have a selling and a buying, and we're going to hope to get a similar number of buys and sells. That way, just the market moving one way or the other doesn't affect the results of the back test. But we could see by combining the long and combining the short if we can make some money. All right, so I'm going to hold the exit days. We're going to hold until for 20 days, and I am again going to set up my scan to hopefully prove out the ORATS forecast volatility and the tick volatility. Here, in this case, they're lower than the implieds, and we're looking in this case where the close to close is above implied. So the close to close says it's a buy, so to speak. The forecast and the tick volatility say it's a sell. So when we and the delta, the absolute delta is around the money, 35 to 65 delta. 20 days to expiration. For selling, the minimum leg price has to be 50 cents. So when we back test those, we'll go back almost a year or 9 months, and we'll hit run back test, and it will populate all of the stocks that would have met our criteria in the past. Here, Genzyme selling 7 of the April 52 puts. It's in the drug sector. The option price was $1.35. 22 days to expiration. The delta, the close to close was above, significantly above the implied. The forecast was below, as was the 20-day tick volatility. You can see the option volume average. The next earnings, there's a call put differential, which is a put call parity. The bid ask width is another filter that we put in. We entered this trade on 326. We exited 417. The entry price was 52.97. The exit price was 53. The entry option price $1.35. It expired worthless. Since we sold, we made money on the options and lost money with the stock going up, with a total profit on this trade of $700. So now what we'll do is we will then run a long counterpart to this, and the long counterpart will have the same types of assumptions: 2,000 premium per stock, 2 trades per stock. However, it will look at the opposite. It'll look for the opposite. Close to close will now be below implied. Forecast will be above the highest here, and the highest here will be the 20-day tick vol. So when we send these flying, we have the results here. Now for the longs, it wasn't very beneficial over the last 9 months to hold longs. We ended up losing 72,433 on 1,390 trades, or an average profit of negative $52 per trade. However, we ran the short at the same time period when it was a little bit better to own the shorts, and we made a whopping 232,000 with a similar number of trades, and our average profit was way up at $166.91. Now, one of the things that we could do in the ORATS scanner is we can download these CSVs and take a look at some of the trades here. So let's look at the longs first. And I sorted these longs based on the profit. The highest profit was 8,000 on a 7 lot. Let's see, it was the CHTT, and CHTT was taken over, and let's see, the entry date was 12.8, and it was taken over in between these two, so the stock price went from 68 way up to 93. The JN70 call went from $1.35 way up to 23. So we made 15,000 on the option. We lost money because we delta hedged the stock. The rule is that you delta hedge right at the inception of the trade and ride it out for 20 days. So the total option profit was 8,500. Not surprisingly, another Chatham trade was way up there. Let's look for the poor trades. The poor trades were ANDE. We bought the October 35 put with the stock at 35.96 for $1. What did the stock do? The stock proceeded to stay right where it is, and the option went to 3 cents. So we lost on both the stock and the option for ANDE. And so these are all the profits. Let's see if we could do a little Excel magic here. We could say, okay, what is the total? And we saw the total sum of negative 72,000. The average, as we saw before, was 53. So let's conversely, let's do the same thing with the shorts. The shorts, let's see what the biggest winner was. UNT was the largest winner. We sold 14 April 45 puts for $1.45. The stock basically went down a little bit. The option went from $1.45 to 20 cents. We made money, and the stock and the options. The greatest profit sorted is $1,917. Again, let's look at just to verify that our average is $169 per trade and our sum is $232,000. So now one of the things I did was I combined both the longs and the short and created an equity line. And so this equity line looks like this. So we start at 0 at 930.09, and then it kind of bumps along, gets up to $12,000 long, gets as low as $69 loss, and then starts its climb up, making a lot of money around the beginning of January, coming down a little bit, 60,000. What's that? 94 to 60,000, and then climbing pretty steadily back up to the total profit of the combined strategy is 170,000. So we're very excited about this excellent behavior of the longs versus the shorts. This time frame, and we're going to add some more data right now to our historical database. It goes to 417, so it's going to be interesting to see the volatility that we've had recently and how it relates to this. But that's it for now. Thanks for listening. Again, Matt at orats.com if you have any questions, and thanks for listening.